1,000 years of northern foreign domination, followed by countless wars against the mighty Chinese Empire. But it doesn't stop there. In early 1858, the French colonial empire unleashed their cannons on Da Nang, marking the brutal beginning of their invasion of Vietnam. And then, in 1890, in the humble village of Kim Lien, Nam Dan District, Nghệ An Province, the future liberator of our nation was born. At the tender age of 21, with nothing but his unwavering spirit, he embarked on a perilous journey to seek a path to national salvation. In 1945, the President Ho Chi Minh read the Declaration of Independence, giving birth to the Democratic Republic of Vietnam, today's Socialist Republic of Vietnam. After 30 years of resistance against the French colonialists and the U.S. imperialists, Vietnam gained independence in 1975 and built the country until today. The picture below is a map of bombing in Vietnam. In addition, about 1 million Vietnamese people were affected by the Agent Orange or dioxin. The children born continue to suffer from birth defects and cancer that cannot be cured. To move up from a poor country heavily affected by war crimes, Vietnam not only needs a lot of time, but also needs great efforts in many aspects at the same time, including politics, culture, education, economics, etc. In particular, finance in economics is a factor that many people are concerned about, with the role of managing and using capital resources to ensure sustainable development for the country. This is another video in the economic series of Discover Incredible Vietnam. I mentioned the history in general so you can get an idea of how young Vietnam's finance is and challenges it faces. The first part, 4 main components of the current financial system in Vietnam. Financial market, various subsectors within the financial market, including capital markets, money markets, and foreign exchange market, etc. Classification and reliability of financial institutions play a crucial role in market trust and functionality. Financial institutions. The importance of intermediary institutions such as banks, which are pivotal in facilitating transactions and financial flows within the economy. Financial instruments. The tools and products used in financial markets, essential for investment, savings, and risk management. Financial infrastructure emphasis on the payment systems that have evolved significantly, especially since 2000. Transition from a dispersed payment system to a centralized one, with the implementation of the interbank payment systems enhancing technological advancement in transactions. These elements collectively outline the foundational structure and operational mechanisms of Vietnam's financial system, highlighting its evolution and current standing. This video focuses on financial market. Before discovering the overview of the financial market in Vietnam, let's talk about the concept. Financial market is the connection between initial lenders and end users with numerous transactions. A developed market economy is the basis for the formation and development of the financial market. The financial market is where the buying and selling, transfer of price to yield capital, occurs through certain trade methods and financial instruments. The objects traded on the financial market are capital amount. Based on various criteria, the financial market can be divided into many types. Part 2. Structure of the financial market. The structure of the financial market can be categorized into several components based on various criteria such as the type of transactions, the maturity period of the financial instruments, and the parties involved in the transaction. By transaction type, we have direct market. In this market, financial assets are sold directly from the issuers to the investors without any intermediaries. For example, stock market, bond market. Indirect market involves financial intermediaries that facilitate the exchange of financial assets between borrowers and lenders. For example, deposit market, loan market, insurance market. By maturity period, we have money market. This refers to the trading of short-term financial instruments with maturities of up to 1 year, including treasury bills, commercial papers, and certificates of deposit. Capital market. This involves the trading of long-term financial instruments, such as stocks and long-term bonds, with maturities of over 1 year. By type of financial instruments. Equity market, where shares of companies are bought and sold. Bond market, where government and corporate bonds are issued and traded. Derivatives market. This includes financial contracts whose value is linked to the price of underlying assets. By participants. Retail investors is the individual investors who buy and sell financial assets. Institutional investors. Organizations such as pension funds, insurance companies, and mutual funds that trade large volumes of assets. Part 3. Three characteristics of Vietnamese financial market. With the financial market in Vietnam, there are three basic characteristics as follows. Number 1. Dominance of bank credit. In the capital market in Vietnam, banks play a crucial role in providing long-term funding for the economy. The Vietnamese capital markets include the long-term borrowing market of banks, the stock market, and bond market. In developed markets like the United States, the proportion of funding from banks is only a small part compared to the capital that businesses raise themselves. In Vietnam, nearly 2/3 of long-term capital for businesses come from the banking system. Several other Asian countries experienced a similar situation. Number 2. Trend of decreasing the proportion of medium and long-term capital from the banking sector. There's a trend among banks to continuously reduce the ratio of medium and long-term credit provision to ensure safety and restructure credit activities in line with international banking standards. As analyzed in the characteristic 1, the capital market in our country is overly dependent on banks. Therefore, reducing the proportion of the bank funding will encourage businesses to actively raise the capital from the stock market, addressing the imbalance in the financial system. Since around 2016, the land prices rose rapidly, causing bubbles. Banks have reduced the lending ratios for the real estate sector to mitigate the risk of an impending real estate bubble. In discussing securities and real estate misconduct in Vietnam, one cannot overlook the case involving FOC Group. Regarding the case involving FOC Group, on October 28, 2023, the Investigative Office of the Ministry of Public Security announced the results of its investigation into criminal activities related to market manipulation and access misappropriation fraud at FOC Group Trust Company, BOS Security Trust Company, Forest Instruction Corporation, and related companies. This was conducted by Trịnh Văn Quyết, former chairman of the board of directors of FOC Group, and accomplices. The investigation determined that from May 26, 2017 to January 10, 2022, Trịnh Văn Quyết instructed Trịnh Thị Minh Huệ, Quyết younger sister, and accomplices to manipulate the stock market for 5 stock codes, resulting in illicit gains of over 732 billion VND. From 2014 to 2016, despite shareholders contributing only about 1,198 billion VND to Forest Construction Corporation's charter capital, Trịnh Văn Quyết directed his subordinates and related individuals to falsify records and documents to fraudulently inflate the company's charter capital to 4,300 billion VND. Subsequently, they applied to list 430 million ROS shares of Forest Construction Corporation on the Ho Chi Minh City Stock Exchange to illegally appropriate over 3,620 billion VND from investors. During the investigation process, the Ministry of Public Security delegated 200 criminal investigation agencies at various levels across provinces and municipalities to receive complaints, verify information, and record testimonies from investors who still hold ROI shares of various construction corporations. This case has attracted significant public attention due to its severe implications in the financial sector in Vietnam. The Hanoi People's Court held the first instance trial of this case on July 22, 2024. Let's go back to feature number 3, trend of restructuring the banking system. Previously, banks experienced rapid growth and businesses accessed cheap funding. However, the consequence was rapid increase in outstanding loans due to many banks investing inefficiently, leading to bad debts. Many banks faced liquidity challenges, high bad debts, and the risk of collapse impacting the entire system. For this reason, the banking sector has tended to restructure the system to stabilize financial conditions and strengthen operational capacities across the network. This restructuring has led to the elimination of weaker banks due to their inefficiency. This is the end of today's video about Vietnamese finance. See you in the next video. Thank you and goodbye.